Have you ever gone to apply for a loan, a car loan, a mortgage loan, only to be told that your credit score isn't high enough? Which is shocking because maybe like me, you use Credit Karma. And having this happen can be extremely frustrating, confusing, and just downright embarrassing. So that's why by the end of this video, you are going to understand how to accurately monitor and check your credit score. And I'm also going to share the 5 tips that I personally follow to keep your score as high as possible. Hi everyone, welcome to our channel. I'm Megan. I'm a mom of 4, a wife, a business partner, a real estate investor, and a mortgage and financing advisor. And if you haven't subscribed to this channel, make sure that you hit the subscribe button and hit the bell to get notified when we release these videos that will help you with your credit, personal finances, and real estate. So if I'm being honest, cracking the code on credit is really hard. And it still confuses and baffles me at times. And I look at credit day in and day out. So I can't imagine how hard it would be for you and if you had that situation happen if you use Credit Karma like I do. Actually, just last week, why I'm making this video is because I pulled my husband's credit score and we thought because Credit Karma was telling us that his score was a 760. And when we pulled it in my office, it came back as a 702. Still a decent score, but it actually had made it so his interest rate had to go higher. So I was frustrated. So what I wanted to do was give all of you some advice on the best ways and the best places to monitor your real credit score, along with those tips on how to get your score higher. There is no better way to begin than to begin talking about Credit Karma. I like Credit Karma. I use it myself. I have it on my phone. I've got the app. But when it comes down to accurately giving you a real credit score used by financial companies, I find that the numbers don't usually line up. And why is this? And what are some better options to monitor your credit than Credit Karma? And that's because Credit Karma is a company that uses what is called VantageScore 3.0. And they get info from 2 of the 3 credit bureaus, TransUnion and Equifax. If you open up your Credit Karma app, you'll see those 2 names right up top. But they leave out Experian. So if something is on your Experian score that Credit Karma isn't factoring in, your scores really can be vastly different when you go to a financial institution. Each credit scoring model has its own formula that may take into account different factors that determine your credit report and your score. And those models weigh things differently, sometimes a lot differently. So when you apply for a financial product like a mortgage, a lender, a bank, they may be looking at different credit factors when they're making that lending decision. So an auto lender, for example, might use a scoring model that weighs any existing auto loans more heavily than other credit factors. And a mortgage lender may be considering entirely different criteria altogether. Let's understand the difference between that, what I just said before, that Vantage score that Credit Karma uses versus FICO. So these are the 2 scoring models and another reason why your score could be different. So lenders, unlike Credit Karma, use the FICO model. They use it, I would say, about 90% of the time, and that stands for Fair Isaac Corporation. So where Vantage and FICO are the most different is the weight that they put on those factors that I'm going to explain. So one of them is length of credit history required. So your FICO requires 1 to 2 accounts open for 6 months. At least it has to show 6 months of payment. So you open a credit card, spend some money, and it's probably 60 days later, make your first payment. It's not till that first payment reports and 6 months later that you'll have a score. Whereas Vantage, what Credit Karma uses, Vantage scores people after just 1 month with an account on credit. So that would be a huge difference if you think you have a score, but a lender's saying you don't have a score yet. So the second one is inquiries. Your inquiries, credit inquiries, when someone pulls your credit, is counted differently with the 2 models. So FICO respects and pulls for the same, if you get your credit pulled for the same purpose within a 14 or 15 day window, they count it as 1 pull, whereas Vantage looks at it as a 45-day window. So therefore, if you are most interested in what lenders see, what other options should you consider? I personally have used what's called Identity IQ And then the second one is MyFICO. There are dozens of others, but what I'm going to do is I'm going to put a link in the description below so that you can check it out and go see what MyFICO can help you, because they use that same monitoring system that lenders do, and they also have identity theft. Before finishing the whole video here, I wanted to give you those 5 tips as well that I have followed that has done a pretty good job of keeping our scores over that 720 mark where you really want to be to get the best rates. So tip number 1 is that you need credit to have credit. So if you're a mom or dad and you're listening to this, put your older kiddos, when they're in their teens, put them on one of your credit cards as an authorized user. What this is going to do is it will start setting them up for success down the road in a way that you can monitor what they're spending and how they're paying it off, because it's a card that you have, and make sure it gets mailed to your house. For those of you that don't have a lot of credit and are listening to this, and maybe you don't have kids either, you need to establish credit to have a strong credit score. I would rather see someone have 2 to 4 credit cards on their credit report reporting with lower balances than 1 credit card that you charge everything that you spend on, even if you pay it off every month. And I can personally attest to that fact, that helping someone get a loan when they don't have much credit is much harder than overcoming poor credit sometimes with late payments or credit issues. So make sure that you are establishing credit, or even if you pay everything off, use your card so you always have credit. It's going to help you save money long term. So my second tip is that the type of credit that you have matters. There are a few different types of credit that reports on your credit report. You have what's called installment debt. Those are things like your car loans, your student loans, things that have a set payment. It never changes, that you pay and it gets paid off over time, and then that account closes. That's what's called installment. The other kind is revolving credit. Revolving is your credit cards, things that can change, and the payments change, the amount changes, and they have a much higher interest rate on them, and usually a top amount that you can spend. These are the accounts that are the most important to keep as low as possible, and then to continue to pay off or keep the balance as low as possible. One tricky thing about revolving credit that I found is that sometimes when you take out certain loans, it gets classified as revolving. And a great example of this is when people take out home equity lines. Home equity lines sometimes go on your credit report as revolving. So if you're taking out a home equity line for like $50,000, you're probably not going to pay it off down below a certain mark, which is what helps your credit. And there's not much you can do. And now it looks like you're maxed out on a credit card because that's what the computer system is reading. Next, tip number 3 is don't close accounts that you aren't using or close accounts that you're trying to pay off. It actually hurts your credit. The more credit that you have and the more credit that you're using and that you're paying down, the higher your credit score will continue to rise as you pay off and pay down things. Tip number 4 and 5, I'm going to tell you, are the 2 most important tips that I have found through the years. So number 4 is to be aware of your balance to your limit ratio. And what that means is if you have a credit card for with $1,000 limit on it, and you have at any point you charge something up to that $1,000, even if you pay that $1,000 off, what happens is the credit reporting bureaus will pull your balance at some point, and it might be before you pay it off. And all of a sudden, it's going to look like you maxed out a credit card. So you want to know if you have a $1,000 limit on a credit card, don't let that credit card go at any time over, my suggestion, $400, 40% or lower. That's why I get another card and use the 2 of them and always keep them below that 40% mark. Tip number 5 is pay your accounts on time. And it seems like a simple thing to pay your accounts on time, but just this month, I have an example personally of something that would have made me have a late payment if I didn't address it in the right way, and I didn't pay it even though I shouldn't have paid it. So what happened is my husband and I have a mortgage payment on our house, and it doesn't include taxes and insurance. It's just the loan, and it's $2,000 a month. Well, The mortgage company, every year, they have to know, even though we pay our taxes and our insurance separately, they have to see that we have insurance and they have to know we pay our taxes, but it's not included in that $2,000. Well, when my mortgage was sold, my insurance company did not update who the mortgage company was. So all of a sudden, we get this paper in the mail from our mortgage company saying that this coming month in December, that our mortgage payment was going from $2,000 to $3,200. So I quickly called the mortgage company, and what happened was they're like, you don't have insurance. So we placed forced insurance on your home, and the total forced insurance amount for the year is $5,000. Well, my insurance policy is like $1,500. Well, I said, okay, I sent the policy that we actually have, and I have to follow up now to get it removed. We just made our payment, and we made that payment for $3,200. We'll get it back, but if I didn't do that, the mortgage company would have put a late on my credit report, and it wouldn't have been my fault. It's just credit is a numbers game, and there's a lot of tricky parts to it. So just keeping up with those things are really important. So make sure that you're always making your payments on time and looking into things that are off. So the lesson at the end of this is that credit can be really tricky and complicated. And so listening to someone who has experience, someone who can help monitor your credit and look at it through the lens and the right agency, and having the right types of accounts on your credit report can make the difference and help you save thousands over your lifetime. You know, I'd love to hear from you about your experience with your credit when it was pulled. Do you use Credit Karma? Was it different when it got pulled? And I want to just really encourage you, go check out the MyFICO, because if you're trying to work on your credit, it's going to be through something like a MyFICO that's going to help you have the real, true reflection of what your score is. So once again, we've put the link in the description below for anyone who would like to check out the credit monitoring company that I use, MyFICO. We have also put the link below if you want to have our team explore your credit and financing options. You just need to click on the link and fill out the information after creating a secure account. I hope that this video has given you insight that you're looking for and that you will join us on our next video. And also, if you know someone who could really benefit from this information, please share this video with them. Hit that subscribe and the bell to get further notifications of videos that are coming out. Otherwise, continue to check out all the real estate and financing videos on our channel. We'll see you guys next time.